A new Cold War trade tensions escalate between Canada and China. The relationship between Canada and China has been deteriorating for years, marked by diplomatic clashes and growing mistrust. This conflict has taken a turn towards a full-blown trade war, impacting industries on both sides. At the heart of the dispute lie accusations of unfair trade practices, espionage, and political interference. The once promising partnership between the two nations has given way to a climate of suspicion and economic retaliation. Canada, a staunch advocate for free trade, has found itself increasingly at odds with China's state-driven economic model. As tensions escalate, the global community watches with bated breath, apprehensive of the potential fallout from this economic standoff. This trade war represents a microcosm of the broader geopolitical shifts occurring on the world stage. The rules-based international order championed by the West is being challenged by China's growing economic and political might. The outcome of the Canada-China trade war could have far-reaching consequences, shaping the future of global trade and diplomacy for years to come. Ottawa's offensive targeting unfair trade practices. Canada's grievances against China stem from a belief that Beijing engages in unfair trade practices that disadvantage Canadian businesses. These practices include intellectual property theft, forced technology transfer, and the dumping of subsidized goods on the Canadian market. In response, Ottawa has taken a multi-pronged approach, imposing tariffs on a range of Chinese imports, including steel, aluminum, and consumer goods. The Canadian government argues that these measures are necessary to protect domestic industries and level the playing field. Furthermore, Canada has sought to strengthen its trade ties with other like-minded countries such as the United States and those in the European Union. This diversification strategy aims to reduce Canada's reliance on the Chinese market and bolster its economic resilience. However, these actions have not been without consequences. China, in turn, has retaliated with tariffs of its own, targeting key Canadian exports like canola, pork, and beef. This tit-for-tat exchange of tariffs has created uncertainty for businesses and consumers in both countries. Beijing bites back retaliatory tariffs and diplomatic strains. China views Canada's accusations of unfair trade practices as unfounded and politically motivated. Beijing maintains that its economic policies are designed to promote domestic growth and development, not to harm foreign competitors. From China's perspective, Canada's actions are seen as an attempt to contain its rise as a global power. The Chinese government has accused Canada of acting as a pawn of the United States, echoing the broader tensions between Washington and Beijing. In retaliation for Canada's tariffs, China has imposed its own import restrictions on a range of Canadian goods. These retaliatory measures have had a significant impact on Canadian exporters, particularly in the agricultural sector. Beyond the economic realm, the trade war has also spilled over into the diplomatic sphere. Relations between the two countries plummeted following the arrest of Meng Wanzhou, a top executive at Huawei, in Canada at the request of the United States. Collateral damage: EVs, agriculture, and the economic fallout. The trade war between Canada and China has had a tangible impact on both economies, affecting industries ranging from agriculture to high-tech manufacturing. In Canada, the agricultural sector has been particularly hard hit, with farmers facing reduced exports and falling commodity prices. The electric vehicle sector has also felt the strain. China, a global leader in EV battery production, is a crucial market for Canadian lithium and cobalt, key components in battery manufacturing. The trade dispute has disrupted supply chains and raised concerns about the future of Canada's burgeoning EV industry. On the Chinese side, the impact of the trade war has been less severe due to the country's massive domestic market and diversified trading partners. However, Chinese businesses have faced increased costs and logistical challenges as a result of the tariffs. Moreover, the trade war has contributed to a climate of uncertainty and risk aversion, making it more difficult for businesses on both sides to plan for the future. This uncertainty has the potential to dampen investment and stifle innovation, hindering long-term economic growth. Shifting sands: global trade dynamics in flux. The trade war between Canada and China is more than just a bilateral dispute. It is a symptom of the shifting dynamics in global trade. The rise of China as an economic powerhouse has challenged the existing world order, leading to tensions with established powers like the United States and its allies, including Canada. The dispute also highlights the limitations of the World Trade Organization in resolving trade disputes between major economies. The WTO, designed to promote free trade and resolve disagreements through negotiation, has struggled to adapt to the realities of 21st-century trade, particularly when it comes to addressing issues such as intellectual property theft and state-owned enterprises. The Canada-China trade war underscores the need for a new framework for global trade governance, one that can effectively address the challenges posed by China's rise, while preserving the benefits of an open and rules-based trading system. This new framework must be based on principles of fairness, transparency, and mutual respect, ensuring that all countries, regardless of their size or economic might, can compete on a level playing field. Beyond the horizon, potential outcomes, and the path forward. The future of the Canada-China trade war remains uncertain. Several potential outcomes are possible, ranging from a negotiated settlement to a protracted economic standoff. One possibility is that both sides will eventually recognize the costs of continued conflict and agree to a compromise. This could involve China addressing some of Canada's concerns about unfair trade practices, while Canada scales back some of its tariffs. Another possibility is that the trade war will continue to escalate, with both sides imposing further tariffs and restrictions. This scenario would likely lead to significant economic damage for both countries and could further destabilize the global trading system. A third possibility is that the trade war will become entrenched, with both sides adapting to a new normal of reduced trade and increased tensions. This outcome would represent a failure to find common ground and could have long-term consequences for the relationship between Canada and China. A call for diplomacy, finding common ground in a divided world. The trade war between Canada and China is a stark reminder of the challenges and complexities of navigating the globalized world. As economic interdependence deepens, so too do the potential for friction and conflict. In this environment, diplomacy and dialogue are more important than ever. Both Canada and China must resist the temptation to retreat into protectionism and instead seek to find common ground through constructive engagement. This will require both sides to approach the negotiating table in good faith, willing to listen to each other's concerns and to make concessions where necessary. It will also require a willingness to work within the framework of international institutions like the WTO, even as efforts are made to reform and strengthen them. The stakes are high. The outcome of the Canada-China trade war will have implications not only for the two countries involved, but also for the future of global trade and the rules-based international order. A failure to find a peaceful resolution will only serve to deepen divisions, heighten tensions, and undermine the prosperity that comes from a world that is open for business.